The best Bitcoin ETFs in 2024? Now, for most people, that will be a hard question to answer. And that's why we at Crypto Potato decided to put together this video, as by the end of it, you'll know more about Bitcoin ETFs than you ever thought was possible. I'm Chris at Crypto Potato, and today we're diving deep into the world of Bitcoin exchange traded funds, exploring their fees, alternatives, and how you can invest in them. Now, in 2024, a significant milestone was reached when the United States Securities and Exchange Commission, or SEC, approved the trading of spot Bitcoin ETFs. This groundbreaking decision has opened a new chapter in the cryptocurrency landscape, enhancing Bitcoin's legitimacy as an investment option accessible to everyday investors. However, navigating the intricacies of buying and selling spot Bitcoin ETFs can be complex. That's why we've crafted this comprehensive guide to help you understand the best options available, their associated fees, custodians, and everything else you need to know about this exciting new product. What are Bitcoin exchange traded funds? Let's start with the basics. A Bitcoin ETF provides investors with direct exposure to Bitcoin without the need to directly own the cryptocurrency. Unlike futures-based Bitcoin ETFs, which allow investors to speculate on Bitcoin's future price, spot Bitcoin ETFs offer a more straightforward approach. Here's how it works. The issuer of a spot Bitcoin ETF, such as BlackRock, purchases Bitcoin and securely holds it with a custodian, most commonly Coinbase. These custodians utilize cold storage solutions, which are hardware wallets stored offline to ensure maximum security. The custodian is responsible for safeguarding the assets and managing surveillance sharing agreements with the exchanges where the ETFs are listed. As an investor, you can buy shares of the ETF through stock exchanges like the New York Stock Exchange or NASDAQ, or through brokers that list the ETF shares. By purchasing these shares, you essentially buy a portion of the funds Bitcoin holds, allowing you to benefit from Bitcoin's price movements without the complexities of managing the cryptocurrency yourself. This is particularly advantageous for those new to the crypto space who may not want to deal with the technicalities of purchasing Bitcoin directly or setting up a secure wallet. Additionally, it's important to note that spot Bitcoin ETF issuers are regulated financial entities that comply with the rigorous standards set by the SEC. With the SEC's approval of spot Bitcoin ETFs in January 2024, this investment vehicle has become a viable option for many investors. Futures or spot Bitcoin ETFs? Now, let's clarify the difference between futures and spot Bitcoin ETFs. Futures Bitcoin ETFs allow investors to gain exposure to Bitcoin's price movements without holding the actual asset. Instead, they use futures contracts to speculate on Bitcoin's future price, which can be beneficial for locking in prices. However, these contracts can be expensive and come with their own risks, as the price of futures can diverge significantly from Bitcoin's spot price. In contrast, spot Bitcoin ETFs provide a more direct investment in Bitcoin, making them a simpler and often more cost-effective option for investors looking to gain exposure to this cryptocurrency. The best spot Bitcoin ETFs? Now that we have a solid understanding of Bitcoin ETFs, let's explore some of the best spot Bitcoin ETFs currently available in 2024. 1. BlackRock iShares Bitcoin Trust IBIT. First on our list is the BlackRock iShares Bitcoin Trust, or IBIT. This ETF offers cost-effective ways for investors to gain exposure to Bitcoin's price performance without the hassle of directly owning the cryptocurrency. The IBIT tracks Bitcoin's price, allowing investors to benefit from its fluctuations through a traditional brokerage account. This ETF simplifies the investment process by managing the storage and security of Bitcoin, so investors don't have to worry about those aspects. 2. Grayscale Bitcoin Trust, GBTC. Next, we have the Grayscale Bitcoin Trust, or GBTC. This is one of the largest spot Bitcoin ETFs, boasting billions in assets under management. Initially created in 2013, GBTC was available only to accredited investors, but it has since transitioned to a spot Bitcoin ETF. The trust has faced challenges including lower liquidity and potential tracking discrepancies due to its previous structure. However, it remains a significant player in the market. 3. Fidelity Wise Origin Bitcoin Trust, FBTC. The Fidelity Wise Origin Bitcoin Trust, or FBTC, is another prominent option. Launched by Fidelity Investments, this fund aims to track Bitcoin's performance, providing investors with direct exposure to the asset. FBTC is available to financial advisors, institutional investors, and retail investors through Fidelity's online platforms. Its Bitcoin is secured by Fidelity Digital Asset Services, which has been regulated by the New York Department of Financial Services since 2019. 4. Bitwise, BITB. Next is the Bitwise BITB fund, which provides investors with exposure to Bitcoin's price by tracking its performance, minus the trust's operating expenses and other liabilities. While its expense ratio of 0.95% is higher than most, it covers management fees, custody charges, and other customary fees associated with fund administration. 5. Volcari Bitcoin Fund, BRRR. The Volcari Bitcoin Fund, or BRRR, tracks Bitcoin's price by purchasing and holding the cryptocurrency directly. This fund began trading on the Nasdaq exchange on January 10, 2024, and utilizes Coinbase custody to protect its holdings. 6. ARK 21 Shares Bitcoin ETF, ARKB. The ARK 21 Shares Bitcoin ETF, or ARKB, is co-launched by ARK Invest and 21 Shares. This ETF provides a regulated way for investors to gain exposure to Bitcoin, tracking its performance via the CME CF Bitcoin reference rate. 7. Franklin Bitcoin ETF, EZBC. The Franklin Bitcoin ETF, or EZBC, was launched by Franklin Templeton and invests 100% in Bitcoin. Similar to Fidelity's FBTC, this fund is not governed by the Investment Company Act of 1940. 8. Invesco Galaxy Bitcoin ETF, BTCO. The Invesco Galaxy Bitcoin ETF, or BTCO, provides secure exposure to Bitcoin by directly investing in physical Bitcoin. It trades on the CBOE BZX and matches Bitcoin's spot price performance through the Luca Prime Bitcoin reference rate. 9. Van Eyck Bitcoin Trust, HOLD. The Van Eyck Bitcoin Trust, or HOLD, is designed to give investors exposure to Bitcoin's price by holding the cryptocurrency directly. It launched on January 4, 2024 and trades on the CBOE BZX exchange. 10. Wisdom Tree Bitcoin Fund, BTCW. The Wisdom Tree Bitcoin Fund, or BTCW, is designed to provide exposure to Bitcoin's price, valuing its shares daily based on an independently calculated value from aggregated trade flows on major Bitcoin spot exchanges. 11. Hashdex Bitcoin ETF, DeFi. Finally, the Hashdex Bitcoin ETF, or DeFi, differentiates itself by incorporating a small element of futures ETFs. Although primarily a spot ETF, it can allocate up to 5% of its assets to Bitcoin futures contracts to help track Bitcoin's price more closely. In-kind and in-cash redemption models for spot Bitcoin ETFs. One of the challenges in approving spot Bitcoin ETFs was determining the buying and selling procedures for these unique assets. This is where the in-kind and in-cash redemption models come into play. In-kind redemptions help maintain tax efficiency by avoiding the sale of appreciated securities to meet redemptions. In this model, authorized participants exchange ETF shares for a basket of underlying securities. This process does not trigger a taxable event for the ETF, allowing for tax deferral for non-redeeming shareholders. In-cash redemption model. On the other hand, in-cash redemptions involve exchanging ETF shares for cash equivalent to the net asset value of the shares being redeemed. This model offers more flexibility but is less tax efficient, as selling securities to generate cash can trigger taxable events. For spot Bitcoin ETFs, the SEC has mandated that redemptions must be in cash rather than in kind. While this might seem like a disadvantage, it likely stems from Bitcoin's unique nature and concerns about potential market disruption. How to choose and invest in spot Bitcoin ETFs. Now, when choosing a Bitcoin ETF, consider factors such as the expense ratio, the custodian, and the fund's performance history. Additionally, assess your investment goals and risk tolerance. Investing in Bitcoin ETFs can be a convenient way to gain exposure to this digital asset without the complexities of direct ownership. You can purchase shares through your brokerage account just like you would with any other stock or ETF. Overall, Bitcoin ETFs have become an essential component of the cryptocurrency investment landscape. With the SEC's approval of spot Bitcoin ETFs in 2024, investors now have more options than ever to gain exposure to Bitcoin. So, whether you choose the BlackRock iShares Bitcoin Trust, the Grayscale Bitcoin Trust, or any of the other options we've discussed, understanding the fees, custodians, and how to invest is crucial. And if you have any questions or want to know something that we didn't cover in this video, then go ahead and drop me a comment below. Otherwise, on screen right now is another video that you should definitely go check out. None of the content in this channel should be considered as financial advice, and you shouldn't make investment decisions based on it. It's highly advisable to consult a professional before making any decisions that may or may not be based on the above content, as this is solely for entertainment purposes only.